NDTV Profit, I am Mahima Vachrajani and you are watching Ask Profit, a show where we get all your stock-related queries answered from our fundamental and technical guests. Before we move on to your queries, let's take a quick check on how the markets are panning at present. Well, the markets are pretty much under pressure. The Nifty 50, let's pull up that. The Nifty 50 is trading almost 0.4% lower. The Sensex is also trading in the similar range, down by about 0.4%. Let's also pull up the mid-cap 150 and the small-cap 250 and see how the broader markets are doing. The broader markets is where the real pain is. The mid-cap 150 is down by about 2% and the small-cap 250 is down by about 2.5%. So the mid-cap and the small-caps clearly underperforming the benchmarks. Let's also pull up the bank Nifty and see how the index is trading in trade today, and there you go, it's trading at about 49,600 levels, down by about 0.8%. Let's pull up the sectoral heat map and see what sectors are in red and green, and there you go, all sectors in the red. It's only the India VIX which is in the green, which indicates that the kind of pressure that the markets are feeling today. The Nifty IT is down by about 0.15%, which is the least hit. But the worst performing sector today is definitely the Nifty PSU banks and the Nifty media, down by about 1.65%. Nifty FMCG though did start in green today, but it's also turned in red. The defensive play is not working both in Nifty IT as well as the Nifty FMCG. So all of those counters in red. Let's also pull up the Nifty contributors before we go on to Vishy. The Nifty contributors, there you go. HDFC Bank, Eicher Motors, Kotak, Mahindra Bank and L&T. The ones contributing to the red are these counters, and Infosys, Reliance, Bharti Airtel and Adani Enterprises are the counters in the green. Let's also shift focus, and in the wake of a sharp rupee depreciation in recent weeks, it appears the RBI has decided to step in and control the volatility. We are joined by my colleague Vishwanath Iyer, who tells us more about it. Vishy.
Hi. So as the RBI seems to be suggesting, and the way the rupee is moving and suggesting, 84 paisa movement in just one trading session is a very sharp move. And the rupee has been appreciating since this open today. Basically, what traders are telling us at NDTV Profit is that the RBI seems to have taken things in charge. If you remember that when Sanjay Malhotra came in as the RBI governor, the stated it looked like the RBI was going to let the rupee depreciate a little bit more, not try to actively control any kind of levels and only manage volatility. But now, because there's a lot of speculation in the market that the rupee could touch 90 anytime soon, that's why the RBI has come in and swooped in and tried to control the rupee. In fact, they've brought it down below the 87 mark. That is a sharp appreciation from where it has been over the last few trading sessions. What traders are telling us at NDTV Profit is that the RBI seems to be communicating very clearly that, listen, we are not going to tolerate any kind of speculation, any kind of extreme volatility in the rupee. Rupee will depreciate, but it will depreciate so in an orderly manner and not in very sharp movements in the currency. So that's what traders are telling us about the rupee. Currently, the rupee is below the 87 mark. Let's see what the rupee ends at towards the end of the trading day.
All right, thank you so much for breaking that down for us, Vishy. We are also joined by our guest for today, Astha Jain, Senior Research Analyst at HEM Securities, joins us now, and we are also joined by Swati Hodkar, who is the AVP at Technical Research, Nirmal Bang, joining us. Welcome to both of you, ladies. I'll start with the first query of the day. Ajit from Kerala is holding Muthoot shares. He's holding 400 odd shares, bought at 258 a piece. He wants to know whether he should hold or average out. Swati, I'll come to you on this one. Muthoot on the charts, because CLSA has given a significantly higher target for these gold finances today, both Muthoot as well as Manappuram. But with respect to the charts, how is it faring?
If we look on a larger degree chart, the chart looks very promising on the weekly or say the monthly charts. I believe that it has the potential to reach up to 2300 levels. Why so? Because it is trading in an upward rising channel and the trend has remained intact on the larger degree on the monthly charts. No wonder from the last 2 days we are witnessing some sort of a profit bookings which cannot be denied, because few days back we have seen the all-time high towards to 2300 levels from that level. Now on a downside it has a very good support of 2100 levels. As long as it sustains about that level, I believe we are likely to again witness some sort of a positive momentum which might take a stocks towards to 2300. Then about that level 2450 can be seen. Since the buying price is very at a lower level, I will suggest to hold on your long positions if possible. try to maintain the profit stop loss of 2100 and hold your long positions for immediate target of 2300, 2450 levels on the high side.
All right. And Swati, he's already, kind of sitting on a significant profit of almost 7.6 lakhs. Then also your view remains the same, or is there a change? Should he book partial profits?
No, my view will remain the same because already I have given the profit stop loss of 2100, which is just a 70 points on a downside. So by taking a that 70-point risk, you can definitely hold on your long positions. If it manages to sustain about 2100, then he will get more profit on the higher side towards to 2300. That's why given a profit stop loss of very nearby to the support levels of 2100. So he can hold the long positions by maintaining that as a profit stop loss.
All right. And Swati, just, one more question before I move on to our next query. With respect to the markets, they have been under pressure, but the real pain today is in the broader markets. How are you reading them? How much of a more downside can you expect going ahead?
Today's closing will play a very important role because why this is so, today the Nifty has given the breakdown of 20 days moving average, which comes to nearby 23,300 levels. Now today, if Nifty manages to maintain a closing about that level, then we can see some relief sign on the technical front. If not, then this kind of a fall is likely to be continued, which might take a Nifty back towards to 23,000 psychological mark, and beyond that level 22,800 can be tested. The positive momentum can be seen only if Nifty sustains about 23,440 levels, which is the Fibonacci 61.8% retracement on from the technical front. So any move above 23,440 will attract a more, or say the fresh buying into the market till the time the market will remains in this way itself, because sentiments is really positive rather than we are witnessing a major sell-off into the all above the sectors as such. So the view is a bit cautious. Try to avoid the major long positions for a 1 to 2 days. Let the market support down at the support levels, and if shows any sign of a reversal from the lower levels, then definitely we can give the aggressively buy calls. But I believe it's a stock specific market. In such kind of volatile market, one should remain a stock specific but with the strict stop losses in order to protect your capital.
Got it. The next query that we have is from Ravi Suresh, who's from Hyderabad. He's purchased NALCO at 196 a piece, and he's holding a quantity of around 500 odd shares. Astha, with respect to the numbers, the street is not very happy. I mean, the street is happy. In fact, let's pull up the charts and see where it's trading today. Although the results were good, the stock did see an uptick in the start of the trade today, but it's come down to around 0.15% lower. But a 78% uptick in the chemical segment revenue is what has aided this kind of growth for the counter. If you've got the chance to read how the numbers were, give us a brief as to how Q3 has panned out, and overall your view whether he should hold or sell NALCO at present.
Hi, good morning to everyone out there. So I think one should remain invested in the counter. The reason being, first of all, the start of the Utkal D block. So definitely that will help the company in giving good numbers going ahead also. In fact, the rise in alumina prices will always be beneficial for this company. But going ahead, I think in the kind of environment which we are witnessing right now in the Trump area, every day we hear something. So I think in that environment, metal prices may remain subdued or in a consolidation phase. So that can be one of the caveat while giving this recommendation. But still, I feel with the kind of number company has posted and the kind of plans the company is having going forward, definitely this can be a counter which can one can remain invested in which. So idea here is to stay invested in this counter. However, the cost price is also 196. So not much upside from here. So definitely hold is a recommendation from our side. And the target which we can maintain on this counter is at around 210 odd levels.
Right. Let's shift focus to the India Energy Week 2025. It's kicking off today at Yasho Bhumi Dwarka in New Delhi. The summit will see, participation from a slew of ministers, CEOs and industry leaders. Let's cut across to our PM.
आप भारत की एनर्जी एम्बिशंस का महत्वपूर्ण हिस्सा है। मैं आप सभी का अभिनंदन करता हूं। विदेश से जो मेहमान आए हैं, मैं उनका भारत में स्वागत करता हूं। साथियों, दुनिया का हर एक्सपर्ट आज कह रहा है कि 21st सेंचुरी भारत की सेंचुरी है। भारत अपनी ही नहीं, दुनिया की ग्रोथ को भी ड्राइव कर रहा है और इसमें हमारे एनर्जी सेक्टर की बहुत बड़ी भूमिका है। भारत की एनर्जी एम्बिशंस 5 पिलर्स पर खड़ी है। हमारे पास रिसोर्सेज हैं जिनको हम हार्नेस कर रहे हैं। दूसरा, हम अपने ब्रिलियंट माइंड्स को इनोवेट करने के लिए प्रोत्साहित कर रहे हैं। तीसरा, हमारे पास इकोनॉमिक स्ट्रेंथ है, पॉलिटिकल स्टेबिलिटी है। चौथा, भारत के पास स्ट्रेटेजिक ज्योग्राफी है जो एनर्जी ट्रेड को ज्यादा आकर्षक और आसान बनाती है। और पांचवा, भारत ग्लोबल सस्टेनेबिलिटी के लिए कमिटेड है। इससे भारत के एनर्जी सेक्टर में नई संभावनाएं तैयार हो रही हैं। साथियों, विकसित भारत के लिए अगले 2 दशक बहुत अहम है और इसमें आने वाले 5 साल में हम अनेक बड़े पड़ाव पार करने वाले हैं। हमारे बहुत सारे एनर्जी गोल्स 2030 की डेडलाइन के हिसाब से अलाइन किए गए हैं। साल 2030 तक हम 500 गीगावाट रिन्यूएबल एनर्जी कैपेसिटी ऐड करना चाहते हैं। साल 2030 तक भारतीय रेलवे ने नेट जीरो कार्बन एमिशन का टारगेट रखा है। साल 2030 तक हम हर साल 5 मिलियन मैट्रिक टन ग्रीन हाइड्रोजन कर सके, ये हमारा लक्ष्य है। हमारे ये टारगेट्स काफी एम्बिशियस लग सकते हैं, लेकिन बीते 10 साल में जो भारत ने हासिल किया है, उससे ये विश्वास पैदा हुआ है कि ये टारगेट भी हम जरूर हासिल कर लेंगे। फ्रेंड्स, बीते 10 साल में भारत 10th लार्जेस्ट से 5th लार्जेस्ट इकोनॉमी बना है। बीते 10 वर्षों में हमने अपनी सोलर एनर्जी जनरेशन कैपेसिटी को 32 टाइम्स बढ़ाया है। आज भारत दुनिया का तीसरा सबसे बड़ा सोलर पावर जनरेटिंग नेशन है। हमारी नॉन फोसिल फ्यूल एनर्जी कैपेसिटी 3 गुना बढ़ी है। भारत G20 देशों में पेरिस समझौते के लक्ष्यों को पूरा करने वाला पहला देश है। भारत कैसे अपने लक्ष्य समय से पहले प्राप्त कर रहा है, इसका एक और उदाहरण है इथेनॉल ब्लेंडिंग। आज भारत 19% इथेनॉल ब्लेंडिंग कर रहा है। इससे फॉरेन एक्सचेंज की सेविंग हुई है और सब्सटेंशियल फार्मर रेवेन्यू जनरेट हुआ है। साथ ही CO2 एमिशंस में सिग्निफिकेंट कट भी आया है। हम अक्टूबर 2025 से पहले ही 20% इथेनॉल मैंडेट अचीव करने की राह पर है। आज भारत की बायोफ्यूल्स इंडस्ट्री तेजी से ग्रो करने के लिए तैयार है। हमारे पास 500 मिलियन मैट्रिक टन्स का सस्टेनेबल फीडस्टॉक है। इंडिया की G20 प्रेसिडेंसी के दौरान ग्लोबल बायोफ्यूल्स अलायंस बना और लगातार एक्सपांड हो रहा है। इससे 28 नेशंस और 12 इंटरनेशनल ऑर्गेनाइजेशंस जुड़ चुके हैं। ये वेस्ट को वेल्थ में ट्रांसफॉर्म कर रहा है और सेंटर्स ऑफ एक्सेलेंस सेट कर रहा है। साथियों, भारत अपने हाइड्रोकार्बन रिसोर्सेज के पोटेंशियल को पूरी तरह से एक्सप्लोर करने के लिए निरंतर रिफॉर्म्स कर रहा है। बड़ी डिस्कवरीज और गैस इंफ्रास्ट्रक्चर के व्यापक विस्तार के कारण हमारा गैस सेक्टर एक्सपांड कर रहा है। इससे हमारे एनर्जी मिक्स में नेचुरल गैस का शेयर बढ़ा है। भारत अभी 4th लार्जेस्ट रिफाइनिंग हब है और हम अपनी कैपेसिटी 20% तक बढ़ाने में जुटे हैं। साथियों, हमारी जो सेडिमेंट्री बेसिन्स है, इसमें कई सारे हाइड्रोकार्बन रिसोर्सेज मौजूद है। इनमें से कई का पता चल चुका है और कई ऐसे हैं जिन्हें खोजा जाना बाकी है, जिनका एक्सप्लोरेशन बाकी है। इंडिया का अपस्ट्रीम सेक्टर और आकर्षक हो, इसके लिए सरकार ने ओपन एकरेज लाइसेंस पॉलिसी OALP बनाई है। एक्सक्लूसिव इकोनॉमिक जोन को खोलना हो या सिंगल विंडो क्लियरेंस सिस्टम बनाना हो, सरकार ने इस सेक्टर को हर तरह से मदद दी है। ऑयल फील्ड्स रेगुलेशन एंड डेवलपमेंट एक्ट में हुए बदलाव के बाद अब स्टेक होल्डर्स को पॉलिसी स्टेबिलिटी, एक्सटेंडेड लीजेस और इंप्रूव्ड फाइनेंशियल टर्म्स की सुविधा भी मिलेगी। सरकार के इन रिफॉर्म्स के कारण समुद्री क्षेत्र में ऑयल और गैस रिसोर्सेज की खोज करने, इनका प्रोडक्शन बढ़ाने और स्ट्रेटेजिक पेट्रोलियम रिजर्व्स को मेंटेन करने का काम आसान होगा। साथियों, भारत में कई डिस्कवरीज और बढ़ते पाइपलाइन इंफ्रास्ट्रक्चर के कारण नेचुरल गैस की सप्लाई बढ़ रही है और इसी कारण आने वाले समय में नेचुरल गैस का उपयोग भी बढ़ने वाला है।
All right, so that was the PM talking at the India Energy Week 2025 and addressing what sustainability and renewable energy mean for India in the next coming years by 2030. Let's move on to our next query. I believe we have a caller lined up. Dheeraj from Hyderabad is calling in. Dheeraj, a very good morning to you. How can we help you?
Good morning, ma'am. I'm holding 500 shares of Indo Count Industries
Okay.
at 280 rupees.
Okay.
So today are the results of that company.
Right.
So can I hold that company or add or sell the company? And I have one more query regarding Zen Technologies. Can we accumulate it at current level?
Dheeraj, you'll have to choose between Zentech and Indo Count.
Then Indo Count, ma'am.
All right. So Indo Count, did you buy it from a longer term perspective? Did you see the fundamentals of the company before buying it?
I have seen the fundamentals.
Okay.
So there is a good upside for companies regarding cloth sector, so
Right.
textile sector.
Correct.
So that's why I added either Gokaldas Exports or Indo Count. So I chose Indo Count at 280 rupees.
Okay. Asa, I'll come to you. Indo Count, is that a good counter to keep holding in your portfolio? And he has compared this to Gokaldas Exports. If you have a view on both of these counters.
So if I talk about their Q2 results, because now the Q3 results will be coming soon. So on in those results, what we have seen that there was slightly a volume miss and there was slightly a margin miss. But now they have done certain acquisitions. In fact, the Indian home textile market, being this company is into this market, now this company is seeing some market share gains in the US also. But we really need to see them in the their reflection in the result or not. So idea here is not to get out from the counter at this point of a time. Just hold this counter, let the results come in. And in fact, he has asked for Gokuldas exports also. But I would like to suggest it's better to wait for the results to come in and then make a call in this counter. So right now, idea here is to stay invested in this counter.
All right, stay invested is the view coming in on Indo Count from a longer term perspective. The next counter that we are talking about is Tata Motors. Ashokan has bought 100 shares of Tata Motors in September 2024 and he's sitting on a loss of roughly 21,000 rupees, and he wants to know whether he should continue to hold or he should sell, and he's bought it from a longer term perspective. Astha, I'll stick with you again for this one. We've kept on talking about how Tata Motors has not performed in the past 1 year at all. What's your view with respect to this counter, and what should he do? Should he continue to hold?
So what we believe that now this Jaguar Land Rover, in the Q4, we can see some sort of positivity in the numbers from this counter. So first of all, we believe that JLR can show some sort of improvement in the Q4. So that is the major reason. Secondly, we believe that both PV and CV, passenger vehicle as well as commercial vehicle space, will see improvement. So I think on the basis of these assumptions, we believe that Q4 can be a better quarter, although Q3 was a muted one. But for Q4, we are quite optimistic on this counter. And idea here is to continue with this counter. So stay invested in this counter, and if everything goes well, then definitely this is poised for the upside of around 720 to 725 at the initial levels.
All right, so that's the view coming in on Tata Motors. But with that, it's time to slip into a short break. More stock queries will be answered on the other side, so stay tuned.
Regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Government is
considering to increase the custom duty on the imported finished goods ranging from consumer electronics to medical devices.
And to rectify inverted duty structure, I propose to increase the BCD on interactive flat panel display from 10% to 20%.
Do you really know the company you invested? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide?
Welcome back. You're watching Ask Profit, a show where we get all your stock-related queries answered, whether they're fundamental or technical. We have our next caller lined up. Swaminathan from Bengaluru is calling in. Swaminathan, a very good morning to you. How can we help you?
Yeah, good morning. My question is regarding Apollo Hospitals.
Okay.
And I'm holding around 14 shares at 6,900 rupees each.
Okay.
And I saw that quarterly report, which seems to be better, and whereas the market is going down at today, it is less than 4% actually.
Right.
And is it because of the market momentum or Adani Mayo Clinic, new amalgamations and everything? That I just wanted to know how the Apollo Hospitals in the medium term to long term.
Got it. Asta, I'll come to you again for this one. As Swaminathan rightly mentioned, that the numbers were not bad. In terms of the Q3 performance, the overall higher occupancy was what kind of drove the revenue. There was a volume uptick as well. Overall, also we're seeing an uptick in volumes as well as EBITDA margins also expanded. But is it just the market sentiment that's pulling down the stock? And overall, what's the view with respect to Apollo Hospitals?
So they have around 6,360 operating stores, I think. So number of stores are good. In fact, it is one of the largest pharmacy platform in India. But now what I believe that despite posting strong numbers, in fact, they have given the rise in the EBITDA margin also, and everything was positive, the stock is falling. So since the investor is in profit right now, because here the cost price, can you just tell me the cost price? Actually, it just kept out of my mind. What is the cost price at which the shares are bought for this counter?
Right. So it's trading the cost price at which Swaminathan bought it, or the current trading price?
Yeah, cost price.
So it's at 6,900. Yes, 6,900 is the cost price at which is bought it.
Yes. So, Mr. Swaminathan, you have to wait for a long, because what we believe that markets are still not giving any chance the stock prices to move up despite posting strong numbers. Maybe the strong results were already discounted and now the high valuations are becoming concern. So I think that is why we are seeing the downside momentum in the stock price. So idea here is, if you can take risk, then hold this counter, or because this counter is poised for some more downside from here. This is what I believe. So here, your investment horizon should be more than 6 months. And then I think, again, you can see your stock prices going above your cost price of 6,900. So idea here is to stay invested, keep patience, because I think this stock can fall more from here. But in a longer term, definitely the kind of fundamentals this company is having, I think there is no issue. So rather than booking losses or exiting at this point of a time, better to stay invested in this counter for a longer run, where the time horizon can lie between 6 months to 9 months.
All right, so that's the view coming in on Apollo Hospitals. The next counter that we're talking about is Galaxy Surfactants. Prakash from Chennai is a long-term investor and he's been holding Galaxy Surfactants 72 shares bought at 2802 a piece since 2 years. He wants to know whether the stock has any scope to generate, further returns is what he's asking. Swati, on the charts, how does it look? How is it faring in terms of results? I'm seeing that the net profit was down by about 9.5 odd %, but revenue did grow by 10 odd % and margins have taken a hit this quarter.
Yeah, on the technical front, Mahima, we have already seen a lot of correction in this particular counter from almost 3300s to now 2200 levels. Now, on the shorter term degree, daily charts, the stock is forming the inverse head and shoulder formations, which is bullish formations. Whenever we see such kind of a correction at the low bottom, if we find out such kind of a formations, definitely we believe that in the near terms, we likely to witness very strong momentum rally on the upside. Now, at the current level, the stock is forming the right shoulder of that particular head and shoulder pattern, inverse head and shoulder pattern. Downside, it has a very good support of 2350 provided by its the shoulder support neckline comes to at around 2470. So we are preempting the breakout. If the stock manages to give the breakout of 2470 levels on the high side, then one side we can witness a very good rally up to at least 2650 levels. So I believe one should definitely hold on these particular positions on the longer term duration or the shorter term duration. Initial targets will be at 2650. Beyond that level, 2700, 2800 levels can be seen. So it's a hold from my end.
All right, so that's the view coming in on Galaxy Surfactants. But let's also again go back to India Energy Week 2025 as it's kicking off at Yashobhoomi, Dwarka, New Delhi. The summit will see participation from a slew of ministers, CEOs and industry leaders. And let's cut across to our Petroleum and Natural Gas Minister Hardeep Singh Puri, who's
major
addressing
geopolitical shifts. It is in this context that I believe that the India Energy Week provides a unique platform for all of us in the industry to reflect and introspect, to catch up with each other, not just formally as business-to-business transactions are undertaken, but also informally for policymakers and stakeholders to understand what other nations are thinking of and what we can do together. We have here a representation that captures both the urgency of the moment and the excitement of the unfolding India story. The India Energy Week has emerged to become, if I may be allowed to say, the second largest energy event in only its third year. More than 70,000 energy professionals from over 50 countries will be participating in this event. I am pleased that the event will see participation from more than 20 energy and other ministers, including their deputies, from important stakeholders such as Qatar, UK, Russia, Brazil, Tanzania and Venezuela, to name only a few. Equally, the private sector and the global advisory and regulatory architecture are well represented. I welcome members and executives of international organizations such as OPEC, and I see my brother, the Secretary General here, IEF and IEA, as well as nearly 100 CEOs from Fortune 500 energy companies such as Honeywell, Petrobras, Technip Energies, ADNOC, Baker Hughes, Vitol, and many more. The fact that this is the first time this year that senior representatives from across the global energy sector will exchange notes is crucial. That is the true value of this week. It enables us to listen and learn from one another, to think together of the mega trends that will shape the future. It is our hope that the India Energy Week provides the much needed network effects which can foster constructive dialogue. But this platform, ladies and gentlemen, is not just a strategic conference. Beyond industry and technology, IEW is also about youth and innovation. More than 500 entrepreneurs are participating in startup challenges like Avinya and Vasudha, thus nurturing the next generation of energy disruptors. It is also an exhibition forum where cutting-edge innovations will be showcased by more than 700 exhibiting companies, more than 100 of which are exciting startups. I am overwhelmed to see this scale depth and size of innovation, particularly in deep tech in the energy sector, such as artificial intelligence, machine learning, quantum computing, big data, drones, and robotics. In many ways, harnessing the bourgeoising innovation ecosystem, most notably in India, was a primary factor behind the inception of the first edition of the India Energy Week in 2023. Major oil and gas companies such as BP, Shell, Exxon, Chevron, McDermott have their global capability centers in India, where lakhs of a lakh being 100,000, Indian engineers are doing cutting-edge design, engineering, data processing, and decision analytics for drilling operations, refinery operations, and seismic data processing globally. The aim was and remains to establish India as the epicenter for new age technologies in this sector. In the past two editions, we witnessed notable innovations such as crude oil tank sludge cleaning, industrial biotechnology applications in upstream and downstream, eco-friendly batteries, remotely operated underwater vehicles, and new electrolyzer technologies light up the event. Capturing the benefit of these innovations is not just necessary for the imminent transition, but also to protect our national interests. Nobody can say with any degree of certainty what the new framework for global energy markets will look like, but we can be sure that it is going to be transforming at breakneck speed, driven by forces that are both accelerating and colliding. What we see today is a recalibration of strategy, prioritizing near-term profitability while keeping long-term transitions efforts in play. Before anyone accuses me of ignoring our environmental obligations, I must state that the primary focus remains on increasing the adoption of biofuels, renewables, and hydrogen. The IEA estimated that global energy investment was going to exceed $3 trillion for the first time in 2024, with $2 trillion going to clean energy, technologies, and infrastructure. Climate change is no longer a looming threat. It is already here. It is unfolding in many grave disasters. Wildfires, floods, and record-breaking temperatures are clear reminders that the world is running out of time. I am a student of history. When I look back at the evolution of global energy economics, I recognize that the very notion of energy transition requires a very deep and nuanced understanding. It is not outright replacement, but more shifting the primacy of one energy source over another. This transition isn't about eliminating hydrocarbons overnight, but leveraging them strategically while scaling renewables to mitigate emissions. For too long, we have framed energy transition as a linear journey, from fossil fuels to renewables, from past to future, from problems to solution. But what if this logic is not feasible? Even when renewables become the dominant energy sources, oil and gas will continue to play an important, if not pivotal role, not just in power generation, but in stabilizing grids, industrial hydrogen, and energy storage innovation. One thing has become absolutely clear to all stakeholders. Energy justice must remain at the core of the imminent transformation. A fragmented transition risks deepening inequality, leaving billions without reliable energy, while wealthier nations surge ahead. If the transition is not just, it will not succeed, because the political economy will not allow it. There are three forces, in my view, that will play a pivotal role in shaping the energy landscape in the coming years. Artificial intelligence and clean cooking are emerging as major energy demand drivers, each shaping the future of economies and societies. AI is one of the largest energy consumers, with data center demand rising 18 to 20% annually by 2030. India's AI-driven digital economy, projected to reach $400 billion by 2030, presents both a challenge and an opportunity. The real question is not how we will meet this surge in demand, but how we will do so without destabilizing grids or derailing climate commitments. Renewables alone won't be enough. AI-driven demand requires round-the-clock reliability, meaning natural gas, coal with carbon abatement, and next-generation nuclear will remain essential. But the potential benefits are immense. AI itself will enhance fossil fuel efficiency, reshaping the energy equation where intelligence, not just resources, dictates energy security. The next great leap will come from dismantling the idea of centralized energy in the form of AI-driven grids that predict demand before it happens. On the other hand, expanding clean cooking gas access requires a multi-fuel strategy, scaling traditional LPG, augmenting bio-CNG, accelerating electrification, and challenging investments into areas such as integration, decentralized renewables like wind power and microgrids to support electric and induction cooking. The challenge is not technology, but scaling access equitably. India has achieved 100% clean cooking access through the Pradhan Mantri Ujjwala Yojana, city gas expansion, and solar cooking pilots, proving that policy-driven solutions can transform lives. The answer to energy transition lies in strategic investments across hydrocarbons and renewables. The future lies in smart capital reallocation, for instance, deploying wind and solar where intermittency is manageable, biofuels where liquid fuel demand persists, and gas where firm power is essential. That is how we assure both affordability and decarbonization. India presents a compelling and diversified investment landscape. 7.6 billion tons of discovered upstream resources, 500 million tons of biofuel foods feedstock, and rising energy demand. At the same time, it is scaling renewables, targeting 5 million metric tons of hydrogen by 2030, $96 billion in hydrogen investments, and a gas share increase from 6 to 15% alongside a $30 billion in refining and petrochemical expansion. Third, resilient supply chains for an orderly transition. Supply disruptions, whether in lithium for storage, nickel for EVs, or semiconductors for AI-driven grids, must not create winners and losers in the transition. Without intervention, the growing gap in energy technology access could leave developing economies locked out of the transition. Governments and industries must act decisively to prevent disorderly shifts. Policy cannot remain while the world accelerates. Governments must craft frameworks that incentivize bold innovation, de-risk essential investment, and ensure commitments beyond the short term. Success will be measured, I submit, not by how fast the wealthiest decarbonize, but how inclusively the world transforms. This third edition of India Energy Week becomes the definitive platform for shaping the energy agenda of the future. This is where transformative partnerships will hopefully take place and take shape, where game-changing technologies are unveiled and the future of energy is written.
All right, that was Hardeep Singh Puri addressing the India Energy Week 2025 and addressing as to how different forms of energies are shaping up and how they'll form, a future, form its future in India going ahead in 2030 as well. Let's move on to our next caller. Pradeep from Kerala is calling in. Pradeep, a very good morning to you. I believe you have a query on HPL engine.
Hi, good morning.
Good morning.
Yeah, I'm just looking HPL engine. I'm holding just 10 shares for a sample, and I don't know it's the right time to buy like a 2,000 or 1,000 share.
Okay. Are you talking about HBL engine or HBL engineering?
HBL engine.
Engines, okay. And you are looking to make a fresh entry, if I'm not wrong, Pradeep, right?
No, actually, I bought already like 10 shares.
Okay.
And I don't know, this is the right time to buy more shares.
Okay.
Like a little large quantity.
Okay. All right.
It's the HPL Power System.
HPL Power Systems, got it. So that's HPL Engineering. So Ati, on the charts, HPL Power Systems, which was, kind of incorporated long back ago in 1983, he's already holding 10 shares and he wants to accumulate more. Is this the right entry point to enter the counter?
Maybe not at all. This is not the right time to average it out or write down to the fresh positions, because as of now, on a larger degree, the stock has forming the negative divergence, and that's why we are witnessing a continuous sell-off in this particular stocks. Downside, it might find a support nearby 420, 410 levels. Up to that level, it can fall down this particular counter because it's on the verge of entering the oversold zone. So downside is more as current from the current levels. So whenever the stocks find out a support nearby the 420 or 400 in particular that zone, at point of time you can again review this particular counter, and we will give the buy call on that particular levels, but not at the current market price. We should hold on because more selling pressure is likely to be seen into this particular.
All right. So no fresh entry at the current levels for HPL Power Systems. The next query that we have is from Vamsi, who's from Andhra Pradesh. She's holding 5 shares of Kaynes Technology at an average price of 4106 per share. She wants to know whether she should keep holding it or average them at a lower level. Swati, on the charts, is that the right strategy to adopt?
It's a right strategy to adopt in order to take your buying price on a lower level, but this particular stock is not showing any sign of a formation supports at the current levels. More downfall can be seen into this particular counter, which might take stocks towards at least 3700 levels on the downside. So wait for that particular levels. Let the stock settle down at 3600 or 3700 in that period of time, but just to avoid a long position at the current market price, if it shows any kind of a reversal from the support levels, then we can take a long position, but not at the current market price.
All right. Bikaji Foods is the next counter. Meenu from Trivandrum is holding about 10 shares. She bought it 8 months back at a price of 700 odd rupees. She's sitting on a loss of 900 odd rupees, and she wants to know whether she should keep holding it from a longer term perspective or not. I'll come to you, Asta, for this one. In terms of the Q3 numbers, they were not very impressive. You know, the palm oil prices have gone up for the company, which is why there was a hit on the margins as well as the net profit overall, and EBITDA also did not fare very well. And this was, you know, including their PLI revenue also. Ex-PLI revenue was even lower. Your view with respect to Bikaji from a longer term perspective?
So I think in the Western snack segment, the growth was not very impressive. It was a flat growth, which we have seen because there are 2-3 segments. First of all, ethnic segment, then Western snacks and packaged food segment. And in fact, their papad business was also, has shown a single digit growth. So now the growth has started, tapering off, because we have seen in the past the growth was higher than what they have posted in the last quarter. So I think, and on the back of, muted growth, the valuations now looks to be expensive. So this is the major reason we are seeing that stock prices are also falling towards southwards direction. So idea here is to, not to make a new entry into this counter, and only 10, the quantity is 10, the number of shares which are held by the investors. So rather than booking losses at this point of a time, since the quantity is not high, my idea here is to stay invested and keep a close eye on the numbers which will be coming going forward. So right now, just hold this counter, keeping in mind the time horizon should be more than 3 to 6 months.
All right. Hold is the view coming in. If the time horizon is between 3 to 6 months, and not between 3 to 6 months, in fact, over 3 to 6 months, the stock is down 5% as we speak. The next caller that we have is Charan, who's from Bengaluru. Charan, a very good morning to you. How can we help you? Charan, I can hear you. You can go ahead with your query. Okay, I think we've lost him. We've lost his line. Let's take the next query. That is PFC. Pankaj Pitroda has a query on PFC. He's holding 1300 odd shares, and he's bought it at 413 a piece. He wants a long-term view on this particular counter. Asta, your view with respect to PFC?
So long-term view is always positive for this counter. In the shorter term, maybe some pain can be seen, but in the longer term, I think the disbursement which the company is doing, they can accelerate further. In fact, I think in the coming quarter, that is Q4, we are expecting disbursement to get accelerated. In fact, if I talk about their asset quality also, so asset quality in the past was showing some sort of improvements. So I think on the back of this, a good long-term story to bet upon on the back of the industry tailwind which this company is enjoying. But in the shorter term, as the markets are volatile in the southwards direction, so maybe the stock can see more pressure from here. But for the longer term, remain invested in this company.
From a longer term, remain invested in PFC is the view coming in from Astha. Now it's time for the rapid fire segment on Ask Profit. Astha and Swati, you both are aware of the format. Keep your answers as short as possible. And we'll start with the first query. NTPC green is the counter. Astha, hold or sell?
Hold. NTPC is looking green, is looking good to us. Hold for the price target of 150 to 120.
Okay, Siemens is the next counter. Vishaka from Bengaluru wants to know whether this is the right time to enter or not. Swati, on the charts?
Not at the current levels. Any momentum below towards 5100 so level, you can definitely take a long position.
Alright, Idea Forge is the next counter. We don't have the viewer's name, but 200 shares bought an average price of 611. Should he hold them or book losses or consider averaging out the investment at current level? Swati, on the charts?
Not to book the losses, hold for a time period of time. I believe where a downside it can be, you can average it out between 350 to 300 levels.
Alright, Gul is holding REC shares bought at 465 a piece. Is this the right time to add more? Astha, from a longer term view, what's the view for REC?
So add more, but not at this point of a time. Maybe the dips at around 390 odd levels or 395 is the right point to make entry into this company.
Alright, Salman Chaudhary is asking about Anant Raj. He's bought 200 at a price of, he's bought 200 shares at a stock price of 600. Can he buy more at the current levels considering the stock is tanking so much? Asa, with respect to the fundamentals, what do you suggest?
So fundamental seems to be strong. 64% was a rise in their bottom line. But looking after the market condition, it's better to wait for making, more addition in this counter. Maybe at around 570 or 565 odd levels, this counter is looking lucrative to make an entry.
Okay, Vodafone Idea is the next counter. 30,000 shares bought at 9.6 a piece from a 2 months perspective. Swati, what should he do?
He can hold on the long positions for a shorter term perspective. 8.4 will be act as a very strong support level. So by keeping that stop loss, you can hold on. Upside if the stock comes down at 10 or 10.50, you can book your profits.
Alright, well, thank you so much both Astha and Swati for taking out time and giving us all of those insights on Ask Profit. Thank you so much for all of you views. With that, we're completely out of time on this edition of Ask Profit. But stay tuned to NDTV Profit for more news and updates on the other side.
Entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know Your Company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Sources telling us is that government is expected to provide a roadmap of the next phase of national monetization pipeline, where they are going to set a higher target for the next fiscal onwards.
Building on the success of the first asset monetization plan announced in 2021, the second plan for 2025 to 30 will be launched to plow back capital of 10 lakh crore in new projects.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV. Hello and welcome. This is KYC, a show designed to give regular investors powerful, actionable insights into the fundamentals of a single NSE-listed company every single day. Well, today we are talking about a chemicals company, which in fact caters to the consumption space, the FMCG space particularly, but it also has a specialty segment going in for it. And Galaxy Surfactants, that's what we are going to talk about today. And it's come up with earnings which have been a tad bit disappointing. But, let's talk about the company in general. Firstly, as I was mentioning, it does cater to the performance segment and the specialty segment. In the performance segment particularly, what we are seeing here is that it does cater to largely detergents and the many other factors that come into place. It is essentially the performance segment that drives volumes, naturally, because it is consumer facing and it's something that always has a lot more in terms of demand. And specialty segment, of course, is driven towards premium formulations. This is something that actually aids margins for the company going in. So these are the two major segments that we are keeping an eye on. Of course, in terms of the revenue split too, performance segment will contribute to about 60% of your overall revenues, where the specialty care segment contributes to about 40%. It does have, the specialty care segment particularly does have premium offerings like mild surfactants and conditioning agents, as well as products used for skin care and hair care. And when it comes to the performance segment, it's some mass market products like SLS and SLES for detergents and shampoos. So again, a very interesting chemicals company which is consumer facing, but it also has several others working in favor of the company. But as we always do, let's take a look at the internals of the company, the fundamentals of how things have fared for the particular company over the past few years. And that could perhaps give us a base of what we can expect as we move into the next set of few years. So, as usual, what we do, as we talk about, the income statement under these circumstances, we talk about the balance sheet, the cash flows, return ratios based on some of these income statements and the balance sheet. Of course, we move beyond the financial statements. We talk about the shareholding pattern, current valuations, and the management pedigree. That's the new aspect that we have added to this particular, this particular piece on the show, and of course the outlook for the company as well. But for all of this, I am also joined by Varsha Chandani. She is also going to help us, get into a lot more insight in terms of how the company has done over the course of the last few years. So Varsha, thank you for joining us. Let's start as usual by talking about the revenue. How has the growth been? How has the profitability come about?
Well, thank you, Agam, for that. So, if I were to talk about the income statement, the revenue for the last 3 years, if I were to see on a CAGR basis, it's been like 11%, and the 3-year net profit CAGR is actually 0. Now, there's a reason behind that. So, Galaxy has generally, they normally talk about the EBITDA per metric ton. So, they have generally exceeded or met its EBITDA per EBITDA guidance basically. But in FY20 and 22, the actual performance was at the upper end of the guidance. While in 21 and 23, if you see, the company went beyond its targets, and with 23 particularly benefiting from one-time export incentive. But however, if you see in 24, in FY24, the numbers doesn't look that good. The net profit in 23 was like 381 crore, which is down, and in 24 it was almost 301 crore. Now, because the performance was close to the average of the guided range, given the challenges the company was facing when it comes to raw material volatility and market pressures, so not good when it comes to financial performance, and specifically on the income statement side. And also in Q3 also, the company did not do well because of the lower demand when it comes to their India segment, and even company was facing pricing issues, and also the volume growth has not been that good for the company. So overall, yeah, not good when it comes to income statement, Agam.
Yeah, sure. So, again, this speaks, and it's a reflection of the volumes growth, but the management is still very sanguine in terms of how they can expect things to turn out. Of course, single-digit volume growth is what the management is looking at, and which, at the size of which the company is currently, it could be a little bit of an underwhelming parameter there. But we talk about the balance sheet, and as far as the balance sheet is concerned, they're on a pretty stable footing. So firstly, they do have a reasonable amount of share net worth, but in terms of your long-term and short-term debt, it's not that much. In fact, a total of a little less than 100 crores in terms of your gross debt, and as against that, you have cash in bank standing at around nearly 200 crores. So it does seem like there's not much of a concern when it comes to balance sheet, which is why we'll give it a thumbs up. And again, it'll be curious to find as to how the accumulated cash and the accumulated profits of the company have panned out over or all the way until now. But since we've spoken about the income statement as well as the balance sheet, let's talk about the return ratios. Varsha, how are they looking at this point in time?
Well, Agam, if I were to compare this with 23, they are not actually great. So in FY23, the ROC was almost 24%. In FY24, it's 18%. While same goes with ROE also, it's in a downward trajectory. Now, the reason behind this is that, first of all, it is expected to expand in FY25, where it is expected, ROC is expected rather ROE is expected at 18 kind of percent, and to sustain over the next year. Now, this is on the expectation side. But during FY23, why the return ratios are actually looking good? Because the company benefited from, export incentives. So company benefited from a 6% export incentive realized in the Egypt business, and a shift in the product mix also led to the supernormal profitability. And that's the reason we even saw in FY23 the company had a good financial numbers, good revenue and EBITDA, and followed by profitability because of the 6% export incentive, which has actually led to good return ratios in FY23. But again, in FY24 the company did not meet the expectations when it comes to financial numbers, and that's the reason we are seeing the drag in FY24 return ratio. So overall, doesn't look good, considering the FY24 numbers.
Sure. Well, fair enough. Let's talk about the cash flows then. And we were a little bit split whether or not we should, in fact, give it a thumbs up or no in terms of cash flows. In terms of the real picture, what we're seeing is that cash flows from operation is a strong 518 odd crores back in FY24. And it's usually been pretty decent, at least as far as cash flow from operations is concerned. It's also improving if you consider how things have panned out about, maybe 5 years down the line, 5 years ago, back in FY20, the same number was around 316. But it has had a positive net cash flow from operations for at least the last 10 years. On the other hand, when it comes to your net cash flows, well, that's been a little bit of an in and out number, at least over the last 5 years. But in the last 5 years, there's only been 2 years, of course, including the last year, where it's been a net outflow. And the outflow has not been considerable, which is why we thought that we'll give this a neutral rating and not necessarily a thumbs down. But on the other hand, we don't want to give it a thumbs up either, because at least on a net basis, while the company is putting in a lot of funds in investing, and while the company is putting in a lot of funds in financing activities, it does seem like it's not showing up in your statements, your financial statements, which is why we want to give this one a neutral rating as far as cash flows are concerned. Now, that's as far as your financial statements go. So overall, well, it's a mixed picture, and I reckon that the one feature that's working against the company is that while you do have a double-digit CAGR growth over the last few years, your profit hasn't really moved up, and that's because your margins have remained largely in the flattish range. But if you consider the shareholding, I want to talk about the shareholding. It seems pretty stable. So, we do have 71%, near 71% shareholding as far as promoters are concerned. FIIs and DIIs, we don't have too much of a change. It's the same for the others. I do want to say that in terms of some of your key investors, you do have investors like Abu Dhabi Investment Authority as a part of the, shareholder base. And besides that, you also have some pretty crucial AMCs who have shareholding in the company. So you have Kotak, Axis, Nippon AMCs, along with ICICI Prudential AMCs, all have a shareholding in the company. So that, of course, is always a positive. It does bode well because you have a fairly wide investor base as far as institutions are concerned. But that said, Varsha, let's talk about valuations. How do they look?
Well, Agam, because the company in FY24 mainly, the company has not shown that kind of performance. The valuation, if I were to talk about the valuation considering the trailing 12 months, it's trading at about 27